All right. All right. So it looks like we're live. So welcome everyone to this long anticipated new edition of the Commercial Cashflow Show. Always excited to see you guys. We were kind of talking offline about how we hadn't really touched base in a while. We need to get back in the swing of things when it comes to this. So, we're really excited to get together and kind of talk shop for a bit. So, Logan, I guess we'll go around the table and give quick updates on what we've been up to, and then we can maybe dive into the articles that we kind of want to discuss. So, Logan, how's
Sounds
everything been with you?
sounds good, man. Yeah, Charlotte's busy, man. Charlotte's crazy. It's growing like wildfire. We've seen just the tiniest little bit of pullback with the increase in rates. I don't know if you guys are seeing any of that. There's just a little bit of fear in some investors, but there's still a lot of investors that are just going full bore in the industrial space. And so, but things are good. Things are good. Several listings coming up. Several investments we're trying to make. Trying to build some strategic partnerships and have been spending a lot of time building systems out. So I'm still pushing forward with the listing, still pushing forward with some investments that I want to do, but trying to build that foundation underneath all of it. So
Absolutely, that's awesome, man. Chad, did you, what's going on in your world?
Yeah, hey fellas, it's good to connect again. I feel like I see you enough on social media that I get to keep in touch with you guys already, but to actually having a conversation is even better. So good to be on the call again. Yeah, same thing with Logan. It's definitely seen some pullback in interest as investors are trying to digest whether this 75 basis points is going to turn into 150 basis points, what we're really going to see this year in terms of interest rate increases. So I think that's going to put a little bit of fear into people. I had one guy who had a mortgage approval last year in roughly November, and the rate that he got quoted was 3.2%, and he never ended up buying anything. Found something this year, just a couple weeks ago, and went and got a quote, and it went up to 4.8%. So that's already factoring in way more than the 75 basis points that have already increased. So I think that banks are already starting to price in some increases, and that's gonna cool the water by design. I mean, that's exactly why they're raising interest rates, is to try and temper inflation here a bit. So it'll be interesting to see what that does. I still think the industrial real estate market is going to be a viable option for a lot of investors. They're just going to have to accept a lower yield. By extension of their debt's going to cost more. But I still think that's a safe place. If inflation's going up at 8% a year, and you don't do anything with your money, by extension, you're conceivably losing 8% on the value of your money every year. So
yeah.
I think that there's still going to be investors that want to place capital for no other reason than they need to hedge inflation. And industrial's as safe as an asset class as I can think of. So I still think that there's going to be a pretty vibrant 2022 in activity.
Yeah, no, and I'll echo on that front as well. I mean, one thing that's kind of surprising to me is the volatility we see in the stock market. Like, if I don't know if you've been watching the markets, but it's just like I feel like every other day it's just up and down, up and down, up and down, and so that obviously is going to drive people outside, people within the stock market to reconsider maybe holding their position in whatever index fund or stock they're in at that moment in time, and reconsider it, maybe reallocating their capital a bit into real estate. So although demand seems to have tempered a little bit, I think it's just because of the initial push. I mean, you imagine 6 months difference, 1.5 in interest rate. That's a big pill to swallow for a lot of people. But I think when they start realizing and looking at the other options, they're going to say, okay, well, where can I put my money that's going to be safer than these types of properties? And maybe at that point in time, it's going to be an easier pill to swallow. But yeah, on my end, I was talking to Logan a little bit offline. I've been working on a shopping center deal for a while. We're hopefully getting that closed here in the next week. I've got some shopping center I'm representing for a lease deal, so we're working off a small lease deal there, doing some office condo deals as well. And yeah, I mean, some listings coming up on the multifamily side. So I definitely do a lot more, and I'm in the boutique brokerage, so I do a little bit more of everything. But I've definitely started gravitating a little bit more towards retail, because it's definitely one of the property types that I really like a lot. So, but that's kind of what's been going on in my world here in Louisville. The Derby's next week, so everyone's all excited about the betting on the horses, and my fiance's mother's coming into town, so we're going to show her around town a little bit, and just kind of take in the sights and sounds of Louisville. So
Nice.
yeah,
Very cool.
Draft week this week, Derby next week. It's a great week in sports. Great way
Oh
to
yeah.
hedge there.
Oh man, yeah. Yeah.
This is a
Yeah.
great time for sports in general because you have everything. Well, with the exception of NFL, but you got basketball, hockey, playoffs
Yeah.
starting. Baseball is in full swing right now. That's a terrible pun, but yeah, it's an exciting time for sports.
Absolutely. I'm a big Phoenix Suns fan, and I think we have a pretty good shot to win it this year. So, yeah, I went to
Nice.
Arizona State, lived in Arizona for a big portion of my time in the U.S., and that's kind of my hometown. So,
There you go.
excited,
Nice.
excited,
Yeah.
excited, excited to see how they perform. But yeah, man,
Yeah.
I'm excited. I'm excited to dive in these articles. We did this particular segment about 2 or 3 months ago now. So, I'm excited to kind of dive in. Logan, do you want to start us off on the article?
Sure. Will do. Absolutely. Let me see if I can share this here.
Yeah.
Give me share screen. Let's see, share screen. I'm going to share this. Let me know if you're seeing this over here.
Yeah, we may need to put it as like I think you can share it to the as a I don't know if I'm trying to think of like ways to extra camera slides. Because it usually what I think we did before was we had it as like an invitation, and I would just add it to the screen.
Okay.
So let me see if maybe we're gonna do it real quick. There it is. Chad, do you know how to do it? I'm trying to remember just off the top of my head. I think before what we did was we just kind of shared the new slide. And if not, let me share my screen, I guess, just to I'll go ahead and do that
kick
for
us
now.
off there. We could
just kick us off, and I'll just go ahead and do that real quick. So I'm going to share a window.
Yeah, we haven't done this in a while. Nobody can expect us to be.
That's right. We're rusty.
Hey, that's all right. Hopefully they're getting some entertainment from our.
There you go. Usually you see the bloopers on the back end. You're getting them up front this time.
Exactly. Let me know if you guys can see. What do you guys see?
Yep, we're seeing you.
Yeah. Okay. So, as I mentioned, I've been doing a lot on the retail side. So I've been following, the U.S. market pertaining to retail projections and everything else. And one of the articles that I found interesting was UBS expects 50,000 store closures in the U.S. over the next 5 years after the pandemic pause. This is kind of a misleading title because prior to these projections coming out, they had been projecting 80,000 store closures. So they're starting to see a pullback in the projections as far as retail store closures, which kind of indicates that the retail market as a whole is actually recovering a lot better than they expected it to post-pandemic. And so in the actual article itself, it talks about the reasoning for some of the pullback. They still estimate that U.S. retail sales will continue to grow about 4% annually. And when you think about it, 4% on such a large number, I don't know the exact total, but I mean, you're talking billions and billions of dollars in retail sales in the U.S. 4% is pretty significant when you're talking about annual growth. And then I think what they're saying is that e-commerce as a function or percentage of all retail sales is going to get up to 25% by 2026. It's 18 currently as of 2021. I remember I spoke with several people, one being Beth Azor, who's a big retail broker and investor in Florida. And she had mentioned how back in 2017, the percentage of total sales when it as compared to online sales was roughly 7% back in 18 and 19. And there was a big push and jump during the pandemic to where now it jumped up to 18%. I think in 2020, it jumped up to 15% from like 10% prior to the pandemic. So, it does seem like there is a steady increase continuing to increase in e-commerce. We'll see if it actually gets up to 25% in 2022. I'm somewhat, skeptical about that, but who knows on that front. So they talked about some of the uses that will probably be experiencing the biggest hit when it comes to store closures. Obviously, department stores are ones that are going to have the biggest issue. They talk about, the retailers. Let me see where it is in the article. Yeah. So risk for, where is it? Oh, yeah. UBS sees most closures shaking out among clothing and accessory retailers, consumer electronics businesses, home furnishing store chains. And then there's other categories where they project some significant closures. And I mean, you're kind of seeing that in your neighborhoods anyways. I mean, I can't tell you. I mean, there's probably I drive by a furniture store that's closing like pretty much every single day. And then, there's the department stores have been well documented in the struggles, in particular Macy's and JCPenney's and some of these other larger department stores. But what they're seeing is that, the large malls are obviously having issues, but the neighborhood shopping centers, which is the property type that I love, I mean, from an investment standpoint, are actually doing extremely well. Because a lot of consumers are wanting to just be able to go to the store real quick down the road, as opposed to having to go to a centralized, large property to be able to shop and then have to deal with traffic and, walking around with thousands and thousands of people around. So the neighborhood shopping centers are actually becoming a lot more popular. And then you're starting to see, obviously, retailers like Walmart, Dollar Generals, discount stores having rapid growth. And they're probably the ones that are experiencing the greatest growth in the sector. And then another interesting fact is that a lot of these digitally native companies like Warby Parker, Allbirds, and some of these other Fabletics are now starting to get brick and mortar locations. And I know we talked about it offline and online on several occasions, where we said, there's significant utility with having a brick and mortar location that, can't be replicated digitally. I mean, there's, obviously foot traffic, you've got, traffic counts, you've got just getting in front of people on a regular basis. And so I think a lot of these online retailers that are native to online are starting to realize that having a brick and mortar store just kind of amplifies their brands. So not only do they get more sales on the ground as far as the retail store is concerned, but they can also amplify their online sales as well. So those are kind of the highlights I took from this particular article. So what do you guys think?
Yeah, I echo a lot of what you said there, Raphael. I think that retail is getting a pretty bad name right now, because every time you open up an article, or you get inundated with all these going out of business and retailers going bankrupt, and that seems to be a comment that predates even the pandemic. Like, it just seems as e-commerce has taken off over the last 2 decades, we just see nonstop headlines like this. Whereas I think that for a number of reasons, people are always going to want to have some brick and mortar retail, whether it's just the experience of going to do it, as opposed to just sitting in your basement typing away, ordering stuff so it can show up on your door. I think that there's something to be said about actually like the activity that's involved with it. And sometimes if you're going to buy a shirt, you want a dress shirt, or a woman wants a blouse, like you can theoretically go online and look for stuff, but it's not the same as actually going into a store and trying stuff on. And sometimes you might be surprised. You might find a tie that you wanted, or do people even wear ties anymore? I don't even know about that. Maybe bad example. Maybe you find
only on Derby
shoes,
Day.
only on Derby Day. So I think that there's a lot to be said about people still going. So I don't think retail's dead by any means, but it also needs to acknowledge that it's declining, because there's only one pie. There's a pie that consumers like us spend money on, and that represents the entire pie of people that are trying to sell it to us. And e-commerce is undoubtedly taking a bigger portion of that pie. And I don't know if it gets to 25% this year either, but it is definitely taking more of that pie away. At some level, it'll stop. And I think that's one of probably the biggest current concern long term for industrial, is that industrial is going to continue growing and growing to try to satiate this demand, but it won't be able to stop as quickly as that ceiling that spending will hit when e-commerce is going to start slowing down to more reasonable levels of just population growth. So I that's kind of an area of concern that I see on both of these. On the retail side, it's very hard for me to predict any area of growth in retail. I just cannot see that brick and mortar retail space growing right now. If anything, there's going to have to be some shrinkage of that, and that might be redevelopment, adaptive reuse, various things you can do with these underperforming shopping centers. But I do believe there's just too much retail in general. So hard for me to see growth in retail. And I'd be concerned myself owning like a big shopping center. I think those neighborhood ones are always going to have demand, because you're going to have like a hairstylist or a chiropractor or a little restaurant in there, and you can't just order that stuff online. So I think that that there always is going to be an element of retail, but I think there's going to be downward pressure on that market for the foreseeable future. And on industrial, I think that there's some warning signs 5 or 10 years out when that growth levels off, but the supply keeps getting added in. Then we just run into a situation where then you have too much in industrial space. So it's a cycle. I think we're in that upward trajectory of industrial right now, where there's still a long runway for growth. Retail, I think, is on the other side. I think retail is coming down on that cycle.
Yeah, I definitely agree on all those points. Absolutely. It was an interesting article that I was reading. It's not the one I'm sharing today, but the small neighborhood retail centers that are anchored by grocery chains tend to be doing very well. And Raphael, you might be seeing this in Louisville. Chad, maybe you're in Edmonton, right?
Yep.
Yeah, I thought so. But we're seeing it here in Charlotte too. We're seeing those, if it's a Harris Teeter that's got a nail salon, or if it's got some place that cuts hair, a juice bar. But those types of experiential, I'm going to go in, I'm going to get something done, or I'm going to go in, I'm going to pick something up that's a consumer item that's going to go quickly, seem to go really well, whether it be in the restaurant space, like I said, in the beauty or cosmetic space. But those types of retail outlet centers seem to be doing very well against smaller neighborhood centers, seem to be performing well. I was actually reading an article, and it's not the one I'm sharing today, but it was talking about that specifically, about how grocery center anchored tenants grocery center anchored centers are outperforming the rest of the retail space, which is interesting, because in a separate article there was a discussion, and this is an interesting fact: the e-commerce, the total e-commerce grocery sales in the U.S. were 66.4 billion, I believe, pre-pandemic. And in 2021, they were, I believe, 122 billion. So almost double the e-commerce sales of grocery, which is why we're seeing a huge surge on the industrial side for cold storage as well. But that was interesting. So I don't know if we're just eating more as a population, but the grocery chains that are brick and mortar retail are doing very well, and the e-commerce grocery side of that coin is doing very well as well.
Yeah, and I'd be interested to see about that. It's probably a lot related to pickup, I'd imagine. So if you purchase online, how are they tabulating that? So if I wanted to buy a list of groceries and I buy it ahead of time and then go to the site to pick it up, I mean, is that considered e-commerce?
Yeah.
Because if that
I'm
is,
not sure.
then yeah, so then that would be, an interesting statistic to learn. And I think that, like you said, retail gets a bad rap because retail itself is so broad. Obviously retail's evolving. It's not like it, retail, when most people think retail, they think these massive shopping centers that have, all the retail stores that you could think of, the clothing stores, the other types of department stores within this large building. But that is not necessarily the way of the future as far as retail is concerned. I think retail, especially those neighborhood shopping centers, as you mentioned, you're starting to see a lot of medical uses getting into these retail shopping centers, because they're seeing the utility of having, access to the general populace through, the just being close to high traffic roadways and visibility and brand recognition, et cetera. Especially those that aren't, you're seeing that with optometrists, you're seeing that with chiropractors, you're seeing that with dentists, you're seeing that with, even physicians. I mean, I have a buddy that it was my fraternity in college, and he's at Cushman Wakefield in San Diego, and he's starting to see that happening as well all over California. So, again, retail's evolving, and the growth is really that's really getting experienced a lot of is obviously the restaurant space. Yum Brands is is probably one of the larger employers here in Louisville, and they own Taco Bell, KFC, and other restaurant concepts. I think Long John Silver's they had for a while. I think they sold that a while back, but they last year they did, I think they opened up 1,300 new locations, which ends up being like like one every 6 hours or one every 7 hours is what they were pushing out as far as new locations were concerned. So that's also, retail. That's considered, it's under the umbrella of retail. So, when people say retail is dead, it's like, think about what retail really is, right? It's transacting either in person, it's in transacting primarily in person. And now they've incorporated e-commerce in there as well through the Walmarts and other things as well. And another trend that I'm interested to see going forward is, the cost to return items online is becoming an issue, because that's one of the most expensive things. I mean, that's why there was partnerships with Amazon and Kohl's for a while. I know they're trying to get more of a footprint, in brick and mortar locations, and one of the primary reasons was for returns, because it just can get prohibitively expensive.
Mm.
Yeah,
So.
that reverse logistics is a business into itself, and they're grappling with how to adapt to that, particularly with oil at $100 a barrel and increasing labor rates. I think it was in Atlanta that Walmart was offering to pay their truck drivers $110,000 a year just because they were struggling to get drivers. So I mean that was in one isolated market, but you have to think that extends across North America. And if you're a company that's seeing increased transportation costs by fuel and labor, then you're 100% right, Raphael. That reverse logistics area of returns is problematic. And I don't know if there's an easy solution to that other than having to raise prices. And that maybe that makes retail more appealing, that bricks and mortar. So that'll be something to watch closely over the upcoming year here.
Definitely. All right. Well, great discussion. I'll go ahead and remove this article.
I just to make it easy, I just threw the link in for the one I was going to do, and Logan Did as well. So if Logan wants to go first, by all means.
Either way, it's up to you guys.
I'll stop.
That's fine.
Share, and
how about you throw one up at random, Raphael, and it'll be like a Russian roulette.
There you go. There you go.
All right. All right. Ready? Eeny, meeny, miny, mo. All right. Let's see.
I shouldn't have said Russian roulette. We might get shadow banned by saying.
Yeah, you got to be careful.
That's true.
Well, now Elon has Twitter, so we should have free.
That's true. Yeah, free speech is back. They say.
We definitely won't get banned on Twitter.
Yeah.
There. Let me see if I can log in. Sorry, guys. I'm not logged into the Globe Street. You're seeing live. Hopefully, you guys don't know my password.
All we can see is the title right now, so you're good.
Oh, is this? Oh, sorry. Is this? Oh, I was on the wrong screen. Okay, so this is the Blackstone. Is that correct? Can you guys see that? Okay, awesome.
So this one's actually just really interesting. So I love reading news about industrial. It's the first thing that I do in the morning. Is I've got probably 5 or 6 different sources that I go to all the time, and this one came out just a couple days ago, and the news broke on this last week as well. But I just thought that this was a pretty good article in spelling out how like just like Elon's taking Twitter private and leverage buyout, Blackstone, arguably one of the largest property owners in the world, has been doing that as well. Not as nearly as prevalent in the news, even though it's massive deals that are happening. So they're buying a REIT called PS Business Parks. And this is a $7.6 billion transaction, represented 12% premium over the stock price previous year. But what was interesting is Blackstone has taken 3 REITs private in the last year, I believe it was. And what was another interesting number I had on that? Transaction volume in industrial in 2021 was $140 billion, up $17 billion from the year prior. So what I just found this very interesting, that a lot of these properties get put into real estate investment trusts because there's benefits to it. Small investors like myself can buy into these REITs, but then you get this massive conglomerate like Blackstone, which actually goes the reverse. They actually go and privatize these companies and bring it into their own private portfolio. So I just found that to actually be very fascinating on how this is rolling out, with a company like Blackstone just buying up everything that they possibly can. And then with sale volume going up $17 billion year over year to $140 billion, you can see that there is a ton of money chasing industrial right now.
Yeah, is there a reason? That's an interesting. I wonder why they're privatizing everything. Is there a reason for that? I guess less oversight, or what exactly is the reason?
Sorry, I misspoke there. Blackstone is still publicly traded. I shouldn't have said privatized. They're taking it out of the REIT, so they're bringing it all within one company as opposed to having it as all these separate REITs. So I can't remember what Blackstone's ticker
Blackstone is. I just looked it up. It's BX.
BX.
So it's $108 a share.
And how is the stock? So their stock is actually getting crushed right now. If you look at the last 6 months,
assets under management, $881 billion. That's so great.
They're approaching
So
$1 trillion. And I mean,
Insanity.
like that's actually like a decent play to look at. Like I might look at Blackstone a bit more closely because they're paying almost a 5% dividend yield, and they're
Oh, wow.
off roughly 40% from their high in December. So I mean, every stock, like you said earlier, Raphael, every stock's getting crushed right now. It's depressing looking at the stock market, but here you get an opportunity to buy a company that has nearly $1 trillion in assets, and they're 40% off their high, and they're paying off nearly 5% dividend. I mean, that looks pretty attractive for someone that just wants to be a passive real estate investor.
Absolutely.
Yeah.
Yeah, I mean, like you said, Blackstone's the world's largest real estate investor, has been prolific acquirer of REITs, helping drive transaction volumes in the sector to $140 billion in 2021.
Crazy.
So they're not responsible for all that $140 billion. It looks
No,
like
that'd be the aggregate. That'd be them.
that's the aggregate.
whole
Okay,
market.
but still, I mean, that's still pretty impressive, and yeah, I mean, I think it just goes to show that their commitment to it, and obviously, Blackstone is a real estate company, right, for the most part. So one thing that we had talked about in the past is it's interesting to see that there are this is happening here a lot. I don't know if it's happening in your guys' market, but they're representatives from Blackstone are coming to different markets across the country, and they're buying up residential properties. Like, I don't know if you're seeing that, and obviously if they can, they buy up like blocks of them from individuals or larger entities. But we're even seeing it on a more granular level where they're starting to buy up some of these properties. And I don't know what the play is there, but again, I think that's going to be interesting to see what happens on that front too.
Yeah,
very much so.
Yeah. Yeah, there's certainly a lot more institutional players getting involved in that single family housing world. I know we've spoken about that in the past on previous episodes. Real quick about Blackstone, have either of you read What It Takes, Schwartzman's autobiography?
Yes, phenomenal.
Isn't that fantastic?
No.
Yeah,
fantastic
you got to check that one out. Yeah,
I'm gonna go order it right now online.
Yeah, it's a fantastic. It's my late night read right before I go to bed. I have it on my iPad and I read through that. The stories are fascinating. I love books like that. It's almost like a history of his life and the various business endeavors that he's taken on and how he created Blackstone. So it's definitely worth the read.
Yeah, no, his early life in particular. I think he called Harvard or something. He was trying to get in. He wanted to be in Harvard, and he didn't end up getting accepted. So he ended up going to, I think, Yale, if I'm not mistaken, or Princeton. It was Princeton.
Yeah,
it was Princeton. So yeah, he ended up going there, and he was like, he just had a chip on his shoulder as a result of him not being able to get accepted into Harvard, and he's got he's just a savage. I mean, the guy's obviously built something like this because of his abilities. So and tenacity.
Yeah, it's fascinating as you read through the book and you just see like the cojones on a dude to just take on some of the projects that he did, and just like it's inspirational, but it's like, holy cow, this guy is just like you talk about building your own personal barriers, like in having these barriers we put up for ourselves, where it's like, hey, I don't think I think I can achieve this, but I'm not sure I can achieve that. It's like there are zero barriers for this guy. It's like I can achieve whatever the heck I want to achieve. Absolutely. And it doesn't necessarily like come out and talk about that, but you can just feel it throughout the book. You can just feel that in his personality.
And I mean, one of the big stories in the book that I took away from was right near the financial crisis, like 2008, 2009, he bought like Sam Zell's portfolio and they were like down to the wire to get this thing done because the markets were starting to close up. And so, he bought a bunch of trophy assets in New York City, these office buildings. And so that's kind of how he was able to execute that deal, and it's paid dividends for him long term. But imagine that was a massive deal, and one of the main reasons he was able to get the deal done is because he knew Sam from his early years. Like they had been running in the same circles, and he knew he could execute. So
crazy.
Yeah, good stuff. You'll like it, Chad.
I just ordered it, and Sam Zell's book is fantastic too.
Yeah,
that's
what was it? What was it called again? I can't remember that. It's something like
How Do You Like Me Now?
How Do You Like Me Now, or something like that? Yeah.
Let me see. I'll see if I can search it real quick. If anyone's listening and they want to look at it, that was a really good book. I really liked Sam's. I actually did his audiobook, and he's the one that read it, and it was fascinating hearing his old voice and the rumble in there. Am I being too subtle?
Am I being too subtle? That was it. Yeah. I remember the title was kind of interesting. One of the cool things about the takeaways I got from that book too is that, obviously tax laws have changed since then, but he ended up he would buy companies that like showed a loss on paper and just use the net operating losses to offset like income from his other companies. And I was just like, damn, like that's pretty ingenious. But he said they closed up some of those loops before, because he had I think he had stake in some railroad companies or something, and he used like an NOLs of some of these struggling companies to just offset other companies he owned, and he was able to save a significant amount in taxes. So
that's crazy.
That's why you hire good accountants. Hire good accountants.
No kidding.
Yeah, exactly.
All right. So next up, let's see what we got. So I'm gonna share screen again. Look at this. All right, can you guys see it?
Got it. Awesome. So I love this article. So this article is about industrial outdoor storage. So I don't know about your neighborhoods. I don't know about where you guys live, but industrial outdoor storage is hot here, and it is something that. And this article goes into discussing about how it's not been institutionalized just yet. We're still seeing there's still a lot of mom and pop investors and private owners of these spaces. They're typically 25% building to land ratio. So you've got 75% of that as land, and it's used for outdoor storage for things like trucks. If you have shipping containers, things like that. Equipment might be used here. So it's a great article, and I think it's one that should be enticing for any smaller investors who are trying to look for an investment space that can still get them a great return, that they think is going to continue to get them a long-term return, but without having to compete just yet with the large institutional players. So we're running into that everywhere in our market, where the big institutional players are gobbling everything up, paying cash, and it's hard for the smaller investor to compete. And I think this is an area where, at least in the very near future, you'll still be able to try to compete, because it's not quite there yet. I'm starting to get that. I actually have a listing that is zoned like this, and it has been used for a truck service center, but it's zoned for outdoor storage as well. And for those of you who have not delved into this market, why do you need outdoor storage? What is that needed for? Well, you see, we've been speaking on every single one of these podcasts, and I'm sure you've heard it on a million other podcasts about the growth of e-commerce and industrial. Well, as you're transporting product back and forth, and as the e-commerce explosion happens, it's not just warehouse space that's needed. How are they moving that product back and forth? They're moving it with trucks. As that industry grows, the need for more trucks, there's a need for more and more trucks, a need for more and more trailers. You got to store those somewhere. They're not constantly driving. At some point, they are parked. Well, cities don't like that, right? They don't want you to have a whole bunch of trailers and trucks stored on your property in the city, because it's not pretty. So if you have one of these facilities, and if you are zoned, I kind of liken this to the mobile home park market, right? Because they're kind of grandfathered in. Nobody wants to rezone to add more mobile home parks to their city, but if you have one, it's valuable, right? Because you're not going to build that. If you've got this type of zoning at a facility, and you can rent out truck parking space for $250, $300 a truck in some cases, I mean, that's land that you're parking something on. I mean, where else are you going to get that type of return, where you've just got a raw piece of land and you've got a 50 by 20 space that you're renting out for $300 a month. I mean, it's incredible. So anyway, just reading down through the article, sorry, I just got excited about it, so I just started spilling it off without even talking about the article. But no, it's the space is a $200 billion asset class that's now starting to get on the radar of some institutional investors. The demand for, they're calling it IOS, industrial outdoor storage lots. They're obviously clustered around cities, and are zoned to permanent outdoor storage. The demand for it is skyrocketing, as we said, because you've got a huge number of trucking companies and outfits that as metro areas explode, construction outfits that need a place to store their equipment. So this demand is growing, and there's just not a lot of it. There's not a lot of it out there, and as we said, they're not they're not rezoning. You're not going to go to your city and have a nice lot that's close to downtown and say, hey, I want to rezone this to store big equipment and construction equipment on. They're going to say, no, that's going to be mixed use retail. That's going to be, we're going to put townhouses there. They want something pretty. They want something that looks nice. So if you have this, you've got a really, really good asset. And if you're not looking at this, or if you want an alternative asset class inside the industrial space, highly recommend looking at this. Yeah, I mean, we can share the link in the article, but it pretty much walks through that. There one company, Altera, which owns 100 of these type of properties in 27 states, is launching a $1.5 billion expansion to defend its leadership in the market. They're targeting space from 5,000 to 100,000 square feet on 2 to 30 acres with deals between 5 and 20 million. So, some of these, some of the models that are being used in this space are for full truck service centers, right? So you can make money off of storing the trucks, but you may also have a service center that is going to take care of, tires and take care of oil changes and wash and wax and all that fun stuff that goes along with servicing the vehicles. Some of them may just need that for they may lease that out as flex space and then have truck parking all the way around. But it's a really neat, very unique asset class inside the industrial sector that I think should appeal to a lot of smaller investors.
That's awesome. No,
go
ahead, Jen. Go ahead, Jen. No, go ahead, Jen.
I was just say I love the idea of it from the standpoint that you're not having to make a ton of tenant improvements either. Whereas, you buy an industrial building, this is one of the big things that comes very quickly for new industrial investors. They quickly realize when they have to do a tenant turnover, how much money they're spending retrofitting the space for the next tenant. From a land standpoint, it doesn't matter who the tenant is. You're not building anything on the property. So your costs of re-tenanting it go down significantly. And you're also essentially kind of land banking this too. So if you could hold on to that land and earn a return on it, not have to spend a lot of money improving it or re-tenanting it, at some point as the land continues to appreciate in value, as more development goes up or just the economy gets improves, then you're in a pretty good position where you've cash flowed on it and banked it for future development. So I think it's a fantastic use. I would certainly be interested in that myself.
Mm-hmm. Yeah, no, and I'll even echo that as well. I mean, we've gotten a lot more. We have we do industrial as well. We have some industrial listings as well, and there's one industrial building that it's a really nice building, brand new construction. One of the things holding it back is the availability of space outside of just the actual building. And so we've had a lot of people say we love the property. It's a great. For what we could use it for, but we just don't have enough space for, either parking our trucks, storing raw materials on site, or whatever the particular use is for that particular property. And so I agree with that. And I'll echo the trucking parking. That's something that we actually work with some investors that's what they like, is they like to buy these properties where they can, they're near, major arteries like, highways, or, we have a pretty good, distribution of product along our rivers, because there's the Ohio River runs right through Louisville as well. So near River Ridge, which is an industrial park here in Louisville, there's storage facilities for whatever products, and then you have to transport these products from those facilities to ultimately the barges and everything as well. And so there's a lot of truck demand in that area. So there was one property I was looking at about a year and a half ago. This gentleman had like 3 or 4 acres of land that he just graveled up and used as truck parking for Shamrock, which is like I don't know if you're familiar with Shamrock. They're like a milk company. They have milk, butter products and stuff like that. And they were paying, I think, $6,000 a month just to store, 30, 40 trucks on site.
Yep.
And it's just gravel, just like a gravel 3-acre lot. And he had a building, because it was 3 acres and then another 2 acres on the side. And he was using those 2 acres. He had like a 10,000 square foot building he was using for his particular, business. And then he just leased out that gravel space for this company. And they had been leasing from him for many years. And they're just like, yeah, it's close to the airport. It's easy for us to get access or whatever. So
fascinating.
Yeah.
It's always interesting to see how people make their money, because I'm like, I would never have thought of that. I'm just like, wow, like I can't believe they're willing to pay that much. And again, $6,000 is not a significant amount, but literally all he did is gravel some dirt, and he's getting $6,000 a month. He's not having to maintain anything or anything. And you can imagine if you start getting it to scale where it's tailored towards these large companies. I mean, I'm sure the pricing they could charge is pretty significant, especially if it's an area close by to where they're, maybe a manufacturing facility that, they don't have enough. They have overflow for trucking. Like, why not sign a contract with someone who has a parcel, just down the road that, and they're willing to pay a premium for that.
And as you add those additional services in, I mean, if you're already parking your truck there and you can get tires done there, who cares if the tire's an extra $30 a piece? And vice versa. Hey, if I can get my truck wash waxed and oil changed here, might as well store it there. They can take care of it while I'm gone and while I park it there. So I think there's that model in particular is very interesting to me, and I love the concept of just raw dirt that you can park stuff on. It's super simple. I mean, put a gate up around it, secure it, put some cameras up, maybe some lights, and you're in business, right? I mean, to that point, I mean, you could do that, and your startup costs would be significantly lower than one tenant turnover in some of these industrial buildings that Chad was discussing. So, I love the concept for smaller investors too, because this can work not just on a large scale. Like we said, that firm's looking, the leader in the industry, Altera, is looking for 5,000 to 10,000 square foot buildings on 2 to 30 acres, but they're looking at deals between $5 and $20 million. So if you're a smaller investor looking at $500,000 to $2 million deals, these guys aren't looking at it. And as this becomes more institutional, those people aren't going to look at it, right? And there are still, it's just like everywhere else in the real estate industry, there are larger entities that are going to lease from you and smaller entities that are going to lease from you. So there may be smaller companies that need that need 3 or 4 parking spots, and that's it. They've just a small trucking outfit. And so you could take something like this and you could buy a piece of land for $400,000 or $500,000 if it's zoned for this, put up a fence, put up some lights, and start marketing, and potentially get boat storage, vehicle storage, RV, truck, and trailer storage, and be in business. So I think it's a win for now for the little guy who's trying to get into the industrial market. And who knows, like to Chad's point, if that's close enough to a city, you're land banking that, and as if you're in the path of progress, then you're cash flowing while your land is going up in value.
Yeah. Absolutely. And again, with the advent and growth of e-commerce, I mean, there's going to be more, trucking demand. I mean, it's just, it's a natural progression. So, there are going to be probably other 3PL companies out there that, need places to store trucks or whatever. And that could be a unique opportunity to capitalize on. So, that's awesome.
That's it. That's all for me.
That's all for me. Well, hey, that I think we had a pretty solid discussion, and I have to check. We got so engaged in the discussion that I had not been checking LinkedIn, so I'll go check to see if you guys are watching on LinkedIn or anything, you guys have any feedback as far as our discussion. We'd love to hear from you. Check real quick.
One thing I just was actually going to say to both of you guys, keep on your radar is SIOR is having their fall conference in Dallas this year. So I'm going to go to that. It's October 20th, 21st, and 22nd. And even if you aren't planning on ever getting your SIOR designation, it's a fantastic conference. It's the best real estate conference I've ever been to, actually. They just bring out some incredible speakers. It's not all about SIOR by any means. It's just a bunch of people getting together from all over the world, and it's just a fantastic conference. So I'd encourage you to check that out, and it'd be awesome if you guys could make it and we could hang out as well and have a drink or two.
Absolutely, I'd love it.
I
actually just interviewed Mark Duclos.
I saw the preview
podcast
of that, actually. He's an awesome guy. I'm such a big fan of Mark's.
He's awesome. Yeah, we interviewed him a couple weeks ago, and he's just a wealth of knowledge. Like, the guy's an absolute savage, for lack of a better word. But it's good to be able to meet him and connect with him, and he provided a lot of great insights. And I know you interviewed him in the past as well. But yeah, he just provided a lot of great insights. So awesome. So Megan, hey Megan, she asked, what was the book you mentioned? Are you in reference to what was it? Oh, the
Schwarzman.
Is that the Schwarzman books?
It's what it takes.
Yeah, what it takes,
and what it takes.
Sam Zell's book was "Am I Being Subtle?" Am I being too subtle? I should say.
Yep.
Do we have any other books we referenced?
I think those were the two. Those
are the two big ones. Okay. Yeah, both great books.
I got to read Sam's book. I haven't read that one. So.
Oh yeah, if you liked just hearing stories of guys that have built big companies. Sam's was really good.
Yeah.
And the am I being too subtle? Like it's kind of an apt title because he's a very forward guy.
In your face.
So,
Yeah. Love
he's
it.
in your face type person. So that's funny.
Love it. Yeah. Awesome.
Well, cool. Well, it looks
Yeah.
like we've covered everything, and we got to talk about a few articles, some of the trends in both retail, industrial, and other property types around the U.S. It's always great to see you guys. We're going to be doing this at a more regular cadence going forward, and we really we're just thankful for all the people who are tuning in and watching. And if you guys are watching this on YouTube or listening to this in a podcast format at a later date, we obviously appreciate your guys' support. Feel free to like and subscribe to the channel. And, if you're listening to this in a podcast format, leave us a 5-star review. We always appreciate it because it helps spread the message and, make sure that we all, get, or more and more people get to benefit from the discussions we have. So.
Absolutely.
Cool. Great
Well,
hanging
cool,
out with you guys for a bit. Look forward to doing more, and keep Dallas on your radar.
We definitely will.
There you go.
I want to get more.
Check that out.
Yeah, I want to get more on the conference circuit as well, especially now that we're doing all this stuff and we're getting to network with so many people across the country. Like,
Absolutely.
I'd love to be able to just hang out and build those relationships further, because I'm confident in the future we're going to get together and do some business together. I have no doubt in my mind. So
agreed.
Yeah, absolutely. Have you guys heard of the Outbound Conference? I don't know if you follow Jeb Blunt or not, but I'm big prospector, so you know me. I like to do a lot of outbound stuff. So anyway, there's one in September in Atlanta, the Outbound Conference. It's just all sales, all outbound sales stuff. So I'm gonna check that one out as well. But yeah, I'm gonna look at SIOR conference as soon as I jump off here. So hopefully we'll see you down there.
Awesome. Okay, I'll look into that one too.
All right, guys. Well, thanks guys for tuning in on the live broadcast, and we'll see you all next time.
See you guys.